Hey, good morning, everyone. We are live. This is Travis Willis from Carter Cow Trading, Trade with Travis on YouTube. Hope everybody's doing very well on this Thursday morning, getting everything else situated. Just want to make sure that I have everything somewhat shared while I'm actually going through and getting everything else. Hopefully, everybody's doing very well. Sorry for not being able to have the get everything ready yesterday or have a session yesterday. Reason why I didn't have a session yesterday is because something that I'm getting ready to talk about a little bit in the next few seconds. I actually ended up getting my internet speed to be able to be a lot faster. Obviously, I'm with AT&T when it comes down to overall speed. Shameless plug, whatever. But one of the things that I ended up purchasing because it was pretty much the same price was 1,000 megabits. So I ended up doing internet speeds and everything else like that. And y'all know the reason why I got kicked out of most of some of the times that we end up having videos was because of my internet speed. So and just the Wi-Fi being placed in. So I'm hardwired now, and hopefully now when we're going through all of these sessions, we don't have that situation anymore. So with that being said, let's go ahead and go through the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you're able to make your own informed decision. Understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of results, which means that if you end up making money yesterday, I promise you'll end up making money today. So with that being said, showing myself onto the screen. How's everybody doing? Happy Thursday morning to each and every one of y'all. Hopefully, you're doing very well. If you're watching this on, Facebook, YouTube, or anything else like that, please help us out by subscribing, and please make sure that you end up clicking on. I don't know if y'all be hearing my son crying in the background as we try to get situated and started, but I can hear him crying. I don't know if he's going to end up coming down here, but you know, he always tries to steal the show once everything gets started. So, love my baby, but yeah, I'm pretty sure he's gonna end up coming down here at some point in time, being able to go from there. But I'm almost done making sure that everything is kind of locked in. If you're new here, what we end up doing each and every morning is that we end up taking a look at some overall trading pairs, see if those some overall trading activity and opportunities to be able to get in when it comes down to the overall Forex market. If there is, then after that, obviously we end up taking a chance and being able to make a trade off of that. If there's no trading opportunity to be able to take, then after that, we end up going from there. And like always, one of them always comes down. Oh, this is my big man. This is my big man Mason. Say hey. A wave. There we go. Okay, you gonna stay with us? Hopefully you ain't gonna scream. Let's see. Wave. Okay, there we go. All right, so let's go ahead and get it started. As we get through, once again, if you have any questions or anything else like that, don't hesitate to be able to ask. This is an interactive session, even though sometimes it never feels like it, but it is an interactive session. So if you have any questions, don't hesitate to be able to ask as we go through and take a look at some of the overall charts and figures and everything else like that. So switching over toward the charts, first thing that we're going to take a look at, obviously, is the economic calendar. So inauguration was yesterday. What does that mean? A lot of stuff is going to end up changing. New president, new mindset, new group when it comes down to what they're going to end up doing for the thought process and everything else like that. You have to keep that in mind when it comes down to being able to trade in general. So the biggest thing that I'm going to end up talking about this for the next few months going into the rest of this year is inflation, inflation, inflation. Why am I saying inflation? Because obviously, if we have stimulus checks and we're giving out money, and when I'm saying we, it's not like I'm giving out money, but when the United States and all these other countries are giving out money, then basically what they're doing is printing out everything. Okay, time for you to go. Hold on. Wow. There you go. Go sit down right there. So, good job. There we go. So, inflation is going to end up being the key. We know that inflation is going to end up being one of those things. So, what does that mean? If they're printing money, then that means that the money is being devalued. If the money is being devalued, then that means that people are going to invest in things that's going to end up holding the overall value. So, looking at gold, looking at silver, precious metals, or anything else like that are going to end up being things that are going to end up popping up and being very strong. All right, so I want everyone to be able to keep that in mind because that's very important when it comes down to the thought process of why we were trading on some of the pairs that we're actually getting into, because we're trying to get ahead of it. By getting ahead of it, that gives you the opportunity to be able to make the most out of it. Okay, so here we go. Let's take a look at what's happening right here. Today, what are we expecting? We have an interest rate decision that's going to end up happening in 35 minutes when it comes down to the European Central Bank, and we'll be able to take a look at that. Later on at 8:30, we really don't have anything aside from the monetary policy statement and press conference when it comes down to the European Central Bank. And a little bit later on today, we're going to end up having retail sales. Going into Friday, Friday is going to end up being a trader's day. Well, no, Friday's going to still end up being a, Friday's still going to end up being a trader's day. Well, most of the action is going to end up happening with the Eurozone, with the market services PMIs and everything else like that. So essentially, we're still looking at more information, more movement when it comes down to the Eurozone compared to any other market. Taking a look at the US dollar index real quick as the first initial pair and being able to look at it as big three. What are we seeing? We're seeing that this market has failed from that initial position that we end up talking about for that overall movement. If we go back and take a look at this from a weekly perspective, what are we saying? The weekly is in a buy zone, but there's still a weekly D extension that has not been fulfilled at 11,550. So what does that mean? That means that we still have some more downside movement that we need to look at for the next few weeks until this market actually ends up hitting the D extension, and then after that, we should start to see a little bit of a U-turn from there. From a daily perspective, we see that the market basically ended up breaking out of this kind of trend line zone, started to push back up, and then after that fell back to the same area where the market basically ended up starting, where the daily D extension was at 11,650. Now, once again, I think this is a portion of what's going to end up being the same, and what's probably going to end up happening over the course of maybe the mid portion of the year, kind of like what happened with the Australian dollar, the New Zealand dollar, at the beginning stages of last year, where the market basically ended up falling to new lows, and then after that, basically recovering. I believe that this market will fall down to this overall area, 11,550, before picking back up and overall moving. The real point of where you'll need to pay attention to is the overall low at 11,613. If it falls down to that area, it's definitely going to end up falling down when it comes down to that movement. So US dollar, we're looking at overall weakness for us being able to get in overall pairs. Now, we talked about inflation. What if that does? We should see that players like gold are going to end up pushing back up. And remember, we end up talking about getting in at 1829 and being able to buy up. We still said any position around this overall box area will be a very good position for being able to get in. And 2 days ago, it actually ended up giving you an opportunity to be able to get in right at 1800 for us being able to get in. You end up taking advantage of that overall opportunity. You end up seeing 70 points in the last 2 days was a overall upside movement. Now, at this point, what does that overall mean? Well, we're going through this overall channel. We have broken out of this channel, fell back to a support, and we're breaking back out. I expect that we're going to end up seeing going into quarter one and finishing up in quarter one, that the gold is going to end up being one of those stronger pairs to be able to get in and stay in for the long term when it comes down to this movement. Now, this is the breakout, so you should see a little bit of a retest, but I do expect that gold is going to end up making its way up to overall highs. But we thought it was going to end up going up to 2100 all the way up to 2300 when it came down to overall movement. So please keep that in mind when it comes down to that. Now the question is, can I be able to get in right now? The answer is no. The market is still retracing. What I will do is I'll wait for the market to be able to see if it can fall back down to the 1860 area. If you can get it back to the 1860 area, then I think that will be a solid position of being able to get in. So just wait for the market to be able to get to another dip price, another low price, and then after that you'll have an opportunity on being able to trade it from there and being able to go after that overall position. Hopefully that makes sense as we go through and take a look at this overall pair as well. All right, so moving forward, let's go through and let's take a look at oil. Remember, excuse me, what oil? What are we looking for? What have we been talking about over the course of the last few weeks? We said that we want to dip in price. If we can get a dip in price, we want to catch the market right around that $50 mark. If we can catch it right around the $50 mark, we'll ride it all the way to $67 for the overall movement. on the weekly candlestick, we're still up here right around this $52 mark, everything else like that. We're waiting for the market to be able to drop off a little bit and be able to get a chance to be able to get in. The market has dropped off, didn't drop off as much as we thought. So this is kind of one of those positions to where you have to be very cautious in the way that you trade. This is not a swing trading position. This is nothing more than a scalp right now if you're looking at being able to trade on oil just based off of the way that it has been moving over the course of the last maybe 5 to 6 days. It seems like it's had small consolidation. In my mind, I believe that the market is going to end up falling just based off of what I'm looking at. But we're not there yet when it comes down to how the market is basically moving as well. So we should see that the market should start to fall. But for right now, I'm going to kind of stay out of this position until I end up seeing something like this where it falls back down to this area and then gives me an opportunity to be able to buy it back up to the upside. If I can be able to get that, then I'm good with being able to trade on this one. If I'm not able to get that, then I'm going to kind of stay away and then allow everything else to be able to make their own moves when it comes down to trading. So looking at oil, kind of staying away when it comes down to that overall position. I don't like what I see. So with that being said, what do we know? We know that the U.S. dollar has basically been the weakest pair. We know that taking a look at it right now, if we look at it, we see that the New Zealand dollar has actually been the strongest pair, and the pound has been somewhat strong as well. I don't know why the New Zealand dollar was strong. We'll probably have to look at what happened with the FX charts last week. But remember, going back to what we ended up talking about, the New Zealand dollar was expected to go up to 75.50, I believe. So with that being said, we'll focus in on the New Zealand dollar, United States dollar. It's the first overall pair that we'll look at for Forex-based pairs and be able to get an opportunity to understand what's happening with that. And then after that, we'll go through and we'll take a look at the Eurozone versus the United States dollar, obviously because they have the most information that's coming out. And then after that, we can focus in on being able to take a look at let's take a look at U.S. Canadian is probably going to end up being stagnant. U.S. yen is probably going to end up being stagnant. Let's see. We'll take a look at the Australian dollar, United States dollar today. So Australian dollar, United States dollar. We're going to look at the New Zealand dollar, United States dollar, Eurozone. Then after that, we'll take a look at some of the indices. And then after that, we get out of here today. So Australian dollar, United States dollar, looking at it from a weekly perspective, what's happening? Market has hit a D extension on the weekly. Market has went up to 73, like we said, because that's a price action point. Right now, what would the market fall back to, or what would it naturally fall back to when it comes down to overall spots? It'd be about 60, or right around 68.50. If the market does fall down from this overall position, as we have seen before. Now, with that being said, the expectation is if the market ends up breaking out of this zone, where's the next area where it's going to go? Next area where it will go end up being right around 75.50 before trying to go after new highs up to the 80s, to the 88 areas when it comes down to overall movement. Now, the U.S. dollar that weak to where we're going to end up seeing that much movement when it comes down to that overall pair, something yet to be seen when it comes down to being able to move, being able to take a look at it, and being able to make that overall opportunity for it, being able to see how the market is going to end up moving forward this pair. But with that being said, we take a look at the daily. What do we see? We see a counter trend line break bullish for this overall movement. This is, I think, this is a very good scalping opportunity right here, and being able to take a trade off of this one. The reason why I say it's a very good scalping opportunity is because one, the market is in the buy zone. We've already seen this market start to make a movement. On a 2 hour, it's not going to end up looking, it's not going to look like the best opportunity to be able to get in. But I do expect if you end up allow the market to be able to drop a little bit later on today and possibly be able to give you half of that position back, then you possibly may be able to get in and be able to trade up to 73. And if all you want to do is trade up to 73 right now, it's still 80 something pips for as an overall movement, with the stop loss being below 71 or being right around a 15 or a 20 minute standby area to where you be able to get in. So essentially what I think is going to happen is this. We go back in, we see that this market basically fell below this overall area that we end up talking about as a natural support. So we're going to push this over and we're going to talk about and see if this market is going to fall back down to this area and give everybody another opportunity on being able to get in. I'm looking at being able to trade this, and obviously we'll come back to this on Friday if it does happen, or take a look at it on Sunday. Want to see the market? I would love to see the market fall back down to this zone. The market falls back down to this zone and gives you another opportunity on being able to get in. right around that 71.60 area. I don't think it's going to fall that hard, but somewhere around there. It does fall back to that area. Then after that, I will look at being able to buy. And then after that, look at being able to buy up to 7,300 first. And then after that, up to 75.50 for the overall position. So I'm not going to jump in yet because the market is overextended. The market has already made this movement. This will be one of those pairs that you'll end up seeing at 9 o'clock to 10 o'clock at night to be able to get in and for being able to trade. Once you end up getting that, then after that, you can be able to make a trading opportunity off of that. But I do like being able to see that this market has popped up a little bit and being able to go from there. So see if it'll fall back down to support. If it does, then after that, you can have a trading pair to be able to get into. If it doesn't happen, then obviously we'll just stay away from it. But that is the trading opportunity that is being presented to you, aside from if you would have got in when the market was at 71.65 the first time it ended up pushing out of this overall zone. Okay, so with that being said, let's go ahead and take a look at the Australian dollar, United States dollar. Australian dollar, United States dollar, what are we looking at? Market, we can see this on the 2 hour, and I'll bring it back to the days, I'll bring it back to everything else, but 2 hours still pushing up in this buy zone. It broke into the sell zone and basically having a breakout and it's retracing. But on this retest, we can see that the retest is actually it's about to make a higher high. Because the retest is about to make a higher high, we can still consider this market to be bullish. Fell down to a natural support, and then after that went back up for its overall movement. Okay, so what does that mean? Let's go back into the daily. Let's see what a market is. Market is basically in the buy zone, just like what happened with the New Zealand dollar. We have even though it was very small, we do have a counter trend line break towards the upside, and the market is starting to move up. The thing that I don't like about the New Zealand dollar compared to the Australian dollar is that right now we're reaching a lot of highs, and we're reaching basically a strong resistance point before this market basically went up to 80. And we can see that the market right around 80.50 has been the next point of where the market's going to end up going. So we got about 300 pips if this market continues to move in this area. I do like the thought of being able to go out to 300 pips for this overall movement. The question is it going to happen? So what I would do is I'll look at the 2 hour, same deal. Where's the natural area where the market basically end up having natural support? This is a breakout area. The natural support will end up being right around 77.40. Right now, the market is at 77.81. Question is the New Zealand dollar and Australian dollar going to end up remaining to be this strong for the rest of the day? I don't think so, just because of the nature of the way that it moves and how much the daily ATR is. So I will look for the market basically to fall back down to this overall support area again, and then after that, look to be able to buy from there. Stop loss will end up being below the next swing low. Then after that, I will look at being able to trade up to 80 for it's the natural position for going up there. So you're talking about 300 points for the overall movement to go after natural pivot area where the market has been before up to 80.50. So this is our next zone. This is our next location that we're trying to hit for our overall position. This is our natural support line. And right now, that will be our overall zone that we would like to be able to buy at, be able to get up to that zone. Okay, so hopefully that makes sense. Now, once again, this would not be a swing trade in my mind. You can, obviously, if you want to. Still don't know how the market's going to end up reacting because we have a new president now. This is literally his first day being in. Want to see what's going to end up changing for his policies, what's going to end up changing for his everything else. So you have to be able to kind of fill that out and be able to see what's happening when it comes down to this overall move. If one thing kind of shows you about how the market is going to end up moving, we could say that obviously we could say that because gold is starting to make a move towards the overall upside like it is, we could kind of get an idea that every other pair is going to start being able to move in that manner as well. So just keep that in mind as we go through. Let's take a look at some of the indices. I want to go back and let's take a look at an update on the overall trading suggestion of US 30. Remember, we had US 30 last week or at the beginning of the week. And then after that, we wanted to see what happened with the overall movement. We talked about two things. We said long-term push is bullish. That the long-term push will end up going up 32.50, 32.520. And we're in a push zone when it comes down to that overall pair. But we also talked about the weekly being in a sell zone. So we talked about um, two options when it came down to the daily, and then after that, trying to make a sale if it did give us an opportunity back down to a lower position to be able to buy back up long term. And taking a look at this from a 2-hour perspective, um, we talked about even if this market end up breaking out of our position, we wouldn't lose money. But we know that, quite frankly, if we had to get out early, it's going to end up happening very fast. So essentially, what happened was this. Remember, we bought and sold right around this blue area. The market ended up pushing up. We ended up hitting our target at 31.50. The market from there, we ended up getting into a sale, and we wanted to sell down to the overall area at 30,255 if the market gave us an opportunity. We got into the sale, and then after that, we ended up getting a strong candlestick on there. So I automatically looked at the 15-minute. Instead of allowing my stop loss to be hit automatically and be able to eat away from all of the profits that I end up gaining from the overall upside, as soon as it ended up making its move that quick, and then after that starting to push away and give us a new high right around 31,144, took the loss on that one. So we ended up winning. We ended up winning overall on that move. And quite frankly, I wish I would have stayed in on a buy or kept my position in on a buy while the market was basically doing what it was doing. But I did not have an opportunity to be able to get into the market yesterday because of my computer. So what am I waiting for? Obviously, we know the market is bullish. The overall opportunities would be waiting for the market to be able to fall. Once we end up seeing that the market falls down again, and after that, possibly being able to trade. But remember, we're at scalping positions right now. We should not be looking at being able to trade long term. Unfortunately, this market has been so much in a bull rally. It could fall at any point in time. Now, obviously, we think it's going to fall at 32,520, but I mean, it could fall literally at any point in time before literally having somewhat of a drop, and I think that drop will end up being extended for a while. But just looking at where the market could go before falling, we got about another 1,300 points before the market could fall. So that's what I'm kind of paying attention to at this particular point in time, looking at buys, and then after that, staying with the overall position from there, being able to keep a mindset of, obviously the market is bullish. Last pair of the day, we'll take a look at NAS 100. NAS 100, same deal, has finally broken out of this triangle that we end up talking about, or this ascending triangle that we end up talking about, to the upside, and right now it's at a retesting zone. Market is expected to go up to 14,320. Currently, right now, that's about another 1,300 points away, somewhere around there, or about 1,000 points away. When it comes down to overall movement. So, what are we looking for? We're looking for buying opportunities to be able to get in. This market has been parabolic when it comes down to this movement. Literally, the market ended up hitting right around 12,903, and since then, it's moved up 400 points for that overall movement. So, essentially, the reason why it's been moving like this is because we talked about this before. There was no area of where sellers were going to end up pushing in right here when it came down to buying profile. We know that. Because we know that, that's the reason why the market ended up pushing up so fast. Now, where's the market expected to go, at least on this 2-hour movement? 13,559. How far are we away from that? About 200 points. How many pips? How many points does the market move on NAS each day? About 200 points. So we got to keep that in mind. We may end up hitting it over the course of the next 2 to 3 days before going from there, or at least that Sunday to Monday trade. So what I will look for is, because the market getting close to the sell zone, I'll wait for a dip. Let's see if we can get a dip, and then after that, look to be able to buy it up to 13,559, and then after that, wait for it to drop again, and then after that, buy it all the way up to a position that we want to be able to get into. But for right now, unless you have your EAs on it and it's basically buying or anything else like that, kind of like what I end up doing on this one. Let's see. Actually, there has not been a crossover. There hasn't been a crossover since the 12,900 area where I ended up taking a buy at on that one. So, quite frankly, if you haven't got in on pairs like that, or you haven't took that large wave when it comes down to the movement, then pretty much it for right now. So, yeah, that's pretty much it on that overall pair. So, No trading opportunities this morning, at least not from the three pairs that we end up taking a look at. Pairs or opportunities end up happening last night, or opportunities end up happening yesterday when it came down to overall movement. So what we end up doing is just keep our eyes out on it, and we have boot camps and seminars and everything else like that that we're going to end up having in the next few over the course of the next few days. Also, I have a 9 o'clock session a little bit later on today, talking about how we end up trading in the market for it being able to go and getting in. If you're interested in being able to learn a little bit more about that, you can go to cartercowcapital.com/start here. Let me show you what that website actually looks like real quick before we get out of here. Go to cartercowcapital.com. I don't know why I never have this the start here portion of for my portion, but there you go. When you go to that, essentially what you'll end up seeing is basically a sign up to be able to hop inside of our next Fibonacci fundamentals class. All you have to do is just basically place in your email address and number and everything else. Click on subscribe. You'll end up receiving an email. And then from there you can be able to go in and take a look at some of that information from. But once again, cartercowcapital.com/start here, be able to hop in one of our free webinars that we end up doing for us. That remember we have our 5-day boot camp that's going to end up starting. On January 25th to January 29th. It's a 5-day session from 9 p.m. to 10 p.m. If you're interested in being able to learn a little bit more, you can actually go to this link and be able to hop in and be able to sign up for each and every day and how it's going to end up being structured. This is one of my favorite events each and every month because we end up bringing in a lot of people, and most of the people that we end up talking to don't necessarily have that much trading experience. Once they end up leaving to be very confident when it comes down to being able to at least get started when it comes down to a Forex trading account, demo account, being able to start and being and putting yourself in a position to where you're very confident and being able to at least take the opportunity to be able to try it out. Then from there, obviously we have a masterclass and all other stuff, but that's like that with anything. That's only in everyone's own pace, being able to get that done. But if you like what we end up doing, please make sure that you end up liking the Carter Cow Capital business page, subscribe to Trade with Travis on YouTube, and obviously we'll see you in the next video going into it on Friday. Like always, plan your trade, trade your plan. Everyone, take it easy.